Q&A.
Thank you. I appreciate it. I'm glad to be here.
Yes, I appreciate you for joining me. And I mentioned before we went on air that I saw some interview you did, and it just blew me away with how deep down the rabbit hole you've gone to uncover some of the mysteries of things that a lot of people don't want to touch on. But I've been open to having those uncomfortable conversations just because I think it's important when you're talking about, allocating some of your currency into a new centralized, centralized, whatever we want to get to, technology. And I'm glad to have you on the show. So for those that may not know who you are, can you give us a little bit of your background and some of your credentials into the subject matter?
Sure. So I'm a longtime Bitcoiner. I currently work at CoinGeek.com, but I've only been there about a year. I have a background in cybersecurity and business primarily, but I was a big monetary activist. I was a big gold bug back in the day. I was a Ron Paul activist in 2008 and 2012. In 2012, a guy asked me if I would make some posters for some Bitcoin, and I said, yeah, sure. And got there, went down the rabbit hole. I started a mining operation in 2013, and just have been involved in infrastructure, mining, startup consulting, Bitcoin infrastructure generally. Also got into altcoin mining, so I was doing Ethereum mining in 2016 and 17, and a bunch of other things. So I've consulted cryptocurrency specific hedge funds, and been working primarily as a startup consultant and a cybersecurity consultant from like 2018 into like 2020, and then I took the job at CoinGeek in late 2020 because they just wanted a guy that had kind of been through a lot of it and remembers the old stories and was specifically a big blocker. So there was a big Bitcoin civil war, which we're still kind of in the throes of. Yes. And I'm on the unpopular side of that, but in my opinion is very much, I'm a Bitcoin originalist. I believe that it solves very specific problems. And I think people deserve to know what Bitcoin's actually capable of. And now it's so mainstream as an investment asset, but we've lost all of the technological disruption that it's capable of. And I just want to make sure that that story gets told. And then ultimately, as people learn, like, oh, I can build a business that can't be built any other way. Ultimately, I want people to create real value as opposed to just trying to absorb value into the assets that they hold. So that's the short story. And there's a million rabbit holes to go down on every one of those steps. So let me know where to start.
All right. So I'm looking forward to diving down a rabbit hole. So just for those, so on this channel here, we're heavy precious metals, and I've never been a digital asset enthusiast. I've been dipping and dabbling in the space since 2013, 12 is when I first came across Bitcoin. And initially, when I came across BTC, I was excited because it offered some solution to some problems that the world is in dire need of. And so the idea of disrupting the banks, as well as, taking your financial sovereignty in your own hands and all the cliche models that came about on this revolutionary technology at the time, it got me excited. And so there's a couple other coins that no longer in existence, but yet Bitcoin being the original OG is still here. But I witnessed over the last 8 years or so how it's changed drastically in a very concerning way, to where I've become more of a skeptical. So I've done lots of videos in the past talking about, having these tough conversations that a lot of people don't want to have, because BTC has become somewhat of the maximalists have become more of a cult type approach in things. So I'm looking forward to having this discussion because I want to dive down a rabbit hole. I want to get people's questions answered as well as get your take on it. Because to me, it went from disrupting the banks to now needing permission of the banks and relying upon the banks and all those other actors involved. But explain to us a little bit of the time frame of this transition, because you do a good job of highlighting it.
Sure. It actually started right away. In fact, the very first comment when Satoshi put out the Bitcoin white paper on October 31st, 2008, the first comment was a guy saying, "This won't work, and here's why." So your typical internet conversation, like, you're wrong, and here's why. And it turned into bickering right away. Most people looked at Bitcoin and said, that doesn't work. Here's why it doesn't work. It needs to have a specific kind of network security that you're not planning for here. And Satoshi Nakamoto vehemently disagreed with that notion. But the notion that was being pushed by guys like James Donald, Dan Larimer, and some of the other people that are still around today and argued with Satoshi on day one, they still think Satoshi Nakamoto is wrong, except for BTC has basically taken the roadmap of Bitcoin's critics by saying that everyone needs to run their own node. Like the technology really can't scale, because if it scales, it will centralize power into too few computers that are doing the validation and consensus and things on the network. And ultimately, you could say that it started on day one, but things really got toxic. There's a few periods of toxicity, really. In 2011, Satoshi, quote unquote, disappeared, but I think there's quite a bit of evidence that he was more sort of edged out or pushed out. He was using more moderators and assistants, and I think at some point, I think they just got sick of him and said, you know what, we can just shut off his logins and get rid of this guy. Like
I'm sorry to cut you. Let me ask you off. So I know I can see, I haven't looked at the comments about questions, but a lot of people are questioning the Satoshi Nakamoto, whether it's a government agency. And so SHA-256 was created by the NSA, and all those type of rabbit hole skepticism is of like, it's a government coin designed by the government, stuff like that. How have you overcome those or worked around those, or does it even matter, or what? Because those are things that, the origin to me matters, because I don't think it's by accident. Like, we don't have this revolutionary solution by accident.
Absolutely. I mean, it does and it doesn't. So I'm actually of the opinion that the Bitcoin white paper and ultimately the architect of Bitcoin is an Australian computer scientist named Craig Wright. Most people don't have a person that they think it absolutely is. There's a camp of people that think that it's Dr. Adam Back, who's the CEO of a company called Blockstream. Other people like to say Nick Szabo, who's a famous old cypherpunk. And like, there's a few candidates that they make some sense if you look at it in a very trivial view. But when you really dig into it, a lot of these guys really, they don't make a lot of sense. And the only one that kind of keeps coming back is Dr. Craig Wright. Now, Craig is probably the most contentious person not even probably, he's definitely the most contentious person in the blockchain economy, because he's not really well liked. He hasn't proven himself Satoshi in the ways that they want him to, which is cryptographically and using the Satoshi keys and doing these various things. But I think part of it is that Bitcoin itself is not so much an invention in a technical sense. Like it's not an invention in the same way that somebody invented the combustion engine, which would have taken a lot of trial and error. You needed to really solve a lot of technological problems and do a lot of testing. And then the thing that you did is a bunch of machines or a bunch of things that didn't exist before. Bitcoin is actually all ideas that existed previously. There is actually nothing new in Bitcoin. It's actually just like, it's a set of rules. And I like to liken it to, in the martial arts space, you have jujitsu and you have judo, and they're actually the same martial art. They're just different rule sets. So you give it different rules and then they evolve into something new. And that's really the brilliance of Bitcoin, is in its simplicity, but it's in the fact that it took things that were tried, true, well-known, SHA-256 being a great example. It is the single most secure hashing algorithm on earth. And you say, okay, this is the security level that I want it to have. He used another techie thing like Merkle trees, Merkle proofs by a computer scientist named Ralph Merkle to allow it to have a data structure that scaled really well and all these other things. But these are things that are very old. I mean, Merkle proofs go back, the research goes from the 70s, and it was used in the 80s up in the 90s and all of that. But it's a game. It's like inventing a board game. Like, you didn't invent the board, you didn't invent the pieces, you didn't invent the printing press that makes any of it or assembles it.
Yeah,
you made rules, and the rules are the game, and that's a big part of it. Now, there are other people involved, but Craig Wright, from all of my research into it, I think it's very clear, if you can get past the noise, that Craig Wright came up with a game theory. He basically invented the game that we call Bitcoin today.
So Craig Wright. So when it comes to, I guess, the double spin, I think that from what I've, I don't dive down the technical side of things, but yet solving the double spin problem, I guess, is the most unique aspect of the relaunching of this technology. And assumably Satoshi Nakamoto or that group or entity or person was able to do that and successfully start this revolution of being able to give people the option of having a style of cryptography that is immutable, and whatever they call it. It's
really, it's an accounting system. So when you have a double spend, this is like if you write, a check, or you write two identical checks and you send them both out at the same time.
Yeah.
If they're each $1,000, but you only had $1,000 in your bank account, whoever gets it first gets it cashed, and the second person to get it, they get a bounced check. Like, they didn't get their money. So the way that centralized processors deal with this, like Visa, for example, is they control the whole ledger. So if you try to spend more money than you have, they say, sorry, you're declined, and they ding you with a fee and say, no, it's not going to work.
Yeah.
And that's really easy. It's very difficult to do when the computers are distributed, when they're decentralized. So how do you do that? Well, it's a couple of things. It's proof of work, which is you're basically giving a costly signal. It's kind of like saying, okay, I'm willing to trust this bad check if you're willing to sit and tap on your keyboard. Like tap your keyboard 10,000 times. That will prove to me that you have, you care enough about this check to, mail it or whatever. Then the other way is to post a public attestation, which is the proof part of it. This is like what Merkle proofs are and cryptographic proofs, is you post a proof that it existed at a given point in time. And that's what the blockchain really is. Like, people don't want to overcomplicate what a blockchain is. It's just it's a public poster board, essentially. So think 1,000 years ago, center of town, you'd go, put a piece of paper on the pole, and that's where people would get their news. That's what the blockchain is. It says, okay, Kurt mailed a check to Michael on this date. It's signed here. Here's his seal. And if somebody puts another one there, it's on top of that one. And so I know that, okay, somebody put something on top of it. So the one at the bottom is the older version of this. And that's the one that we should actually check. Right. So that's the double spend problem is that who's willing to do this best. And it created a competitive game. And whoever does the game of accounting for the ledger the best wins the most Bitcoins for it. So it's a self-rewarding, self-perpetuating economic game that we play, and we've been rewarded handsomely if we play it well.
Right. And so along with that, as I mentioned, to start this off, for those that are tuning in, I have Kurt Wuckert joining us here. And so he's definitely going to shine a light on this whole, I want to talk about the dark side of things, because as I mentioned, things changed. And I think it was 2014, 15, 16-ish, things began to shift in the favor of those that are already controlling this current monetary paradigm. And so once the narrative changed from disrupting the banks to waiting on adoption and allowing this new institutional money, like the big push for institutions to get involved, that's when I went with this thing changing. So I want to dive into that. So I have some of those pictures of whatnot, if you want to put up on the screen to further highlight that. But I'm not sure where do you want to go with that, but give us some of the breakdown as to how the banks became.
I'll give a starting. Bitcoin is a disruptive payments technology. I think a lot of people, vaccines are on a lot of people's minds today. So here's a good example that people can relate with. If the drug industry figured out a way to, let's say, cure COVID-19 and it cost $3 a person and it was gone, everything eradicated. That's exciting news, right? Like the world would rejoice. But the companies that are making all this money on vaccines, all this soft money that the government's giving them to give away free vaccines, that's very upsetting. They're making a lot of money right now. So it would make sense to let's buy that drug's patent and let's shelve it. We don't want to sell that drug that solves this whole pandemic problem right now because we're making too much money doing this other thing. So this is the exact same thing that happens all across industry. Now, Bitcoin is a disruptive payments technology. So the payments giants, this is MasterCard, Visa, PayPal, and some of these other emerging things, the people that became Venmo and like in Europe, you get like Tiki and some of these other companies. Like, how do you buy out Bitcoin? How do you buy the patent and shelve Bitcoin? It's out there in the wild.
Right.
So the target was 2014. MasterCard basically put out a bounty and said, we're going to create an incubator. We're going to call this incubator Digital Currency Group. And we are going to invest in the developers of Bitcoin and Bitcoin related technologies and businesses. And we've got a ton of money because we're MasterCard. And we're going to help guide the growth of this industry. Like, we understand money. We're one of the biggest, we're connected to the biggest banks and all this other stuff. So go talk to our friend here. You can see on the tree, everything goes to Digital Currency Group. And the picture of the guy on the left is a guy named Barry Silbert. Very talented investor, very successful tech entrepreneur and investor himself. And he was put in charge as the CEO and founding CEO of Digital Currency Group, and then put together a group of people primarily from other Silicon Valley venture capital firms, but also they had Larry Summers from the Clinton Foundation and the World Bank. He was a World Bank, I don't know if it was president, but he's a C-level World Bank executive. put in charge of helping guide the Bitcoin economy of 2014. And then from that, I mean, you can see all the things that they own. I mean, it's basically the who's who of the entire blockchain space. Like if we're talking in the US, like Coinbase, Kraken, they're the two biggest exchanges, or two of the biggest exchanges. You have BitGo, is the largest custodian in the world. You have Grayscale, which is the single largest investment fund. You can buy Grayscale stock, for example, right now, and it's basically the only way that like a serious boomer who won't go into a crypto exchange can get some Bitcoin exposure.
Yeah,
and then a bunch of other things. They have a laundry list of companies that they are in control of. Their portfolio is hundreds of companies.
Yeah,
it's wallet developers. It's various exchange protocols. It is the company Blockstream itself, which is at the time the company that employed every single serious developer, not every single total developer in Bitcoin, but the guys that were the gatekeepers, the guy who, the kind of guys who say like, okay, here's the direction we're going to go. And I've got a huge Twitter following, or I'm the moderator on the Linux Foundation website or wherever. These guys were all employed by Blockstream.
Yeah.
And then secondarily, they funded and founded a company called Lightning Labs, which is one of the major companies in development of a technology called Lightning Network, which is a way to allegedly scale Bitcoin by not really using Bitcoin at all. So they remade Bitcoin in their image with a lot of money and a lot of smart tactics, but the sort of thing that as a Bitcoiner feels predatory to me and to a lot of other people that agree with my my view on Bitcoin. But other people look at it and said, well, this is a good thing. Like a lot of early people got very, very wealthy and that's great. But they got wealthy to the detriment of Bitcoin itself and the freedom that it could have given as a peer-to-peer cash system to everybody. So there are certainly winners and losers in this game.
Right. So on this graph here with, let me put this back on the screen here. So with MasterCard taking a liking into this disruptive technology, so you can't beat it, join it, or fund it. And you put some people in charge of things in here. So I actually, so I'm a fan of Litecoin. I see Charlie Lee on here as being one of the people connected. I guess, is that connected to Coinbase or because he's a project holder, he dumped his bags saying he didn't want to have any problems. So is Litecoin fall in the same category of?
Yes. So Litecoin, Charlie Lee is a big pal to the same people. He was an employee at Coinbase. Right. That's how he got Litecoin listed. When Litecoin was listed at Coinbase, it was a transaction, or it was a coin that had transactions of essentially zero. Yeah. There was there was hardly any US dollar value going across that network, and there were very, very few transactions. Most blocks were completely empty of transactions. But then with his pull at a place like Coinbase, like, hey, I'll bootstrap the whole thing, you push it, and Coinbase lists the thing, and then all of a sudden it's this huge traded asset goes, explodes in value. Made Charlie Lee a very, very rich man because he was the only miner of the project for a very long time, which probably made him he's certainly one of the biggest, if not the biggest, individual holder of the coin. Yeah. And then ultimately, dumped at the top of the market in 2017. And actually, in my opinion, started the bear market. Like he created a gigantic bearish engulfing channel or candle on one of the largest cap coins in the market at the time. So
when he dumped, I
mean, it was the largest exchange, and he was the largest holder, and he basically market sold and told people like 2 or 3 days later. But you can see the red bearish engulfing candle that was just incredible. And it scared the living daylights out of everybody. People looked at Litecoin and said, oh, this is a blue chip crypto. Yeah. Like, this is it. This is the exit. And then it was the top of the market that he sold. So not that he was lucky. I think he created the bear market.
Yeah. I remember around our same time frame, a lot of people were, talking about five categories or five list of 5 things that would drive the next Bit or Litecoin adoption. Right. And of course, they were trying to speculate as to what they were. And assumption was that some major fintech, probably PayPal, was going to use it or list it. And so it got a lot of people excited. But, I'm curious, because I want to definitely touch on Litecoin more. But Bitcoin as a whole is not the same as it used to be now because there's a much bigger presence from the banks or whatnot. Yep. And so BTC as it is now, there's more, I guess, regulation and scrutiny about to be passed down from the Biden executive order, all that stuff coming on. Yeah. So in your opinion, is Bitcoin BTC as it is today the same disruptive coin that threatens the banks, or are they all like relying upon it and they want it to succeed? That's why Michael Saylor and all those guys are out here, shilling or whatnot. What do you think?
Absolutely not. They completely co-opted it between 2014 and 2017. This is what's typically referred to as like the Bitcoin Civil War or the Bitcoin Scaling War, is often called. Ultimately, the people that were I call them the small blockers. What they wanted is a data cap limit on how much data could be pushed across the Bitcoin network, and it's 6 megabytes per hour. So that's it. That is the hard cap. You can't do more than 6 megabytes across the BTC network.
Yeah,
and that means that if there's any more than that wants to try to transact across the network, then the toll starts going up. The fees get higher, and the waiting list. You're stuck in a queue. And if you want to get in front of it, you got to pay more and more and more. This is why we see occasionally big spikes, $50 a transaction or whatever else. They are the ones that were funded by MasterCard and Digital Currency Group and a whole mess of other Silicon Valley and old world financiers to treat it as this is a digital gold system. It's like it's a savings technology. It's a way to basically have precious metal, but in digital. It's a digital precious metal. Think of it as that. It is not a disruptive payments technology. Don't you even worry about that. And then the people who believe that it should be a frictionless global payment system, as well as a tokenization and a smart contract platform and all this other stuff. These people were ruthlessly marginalized, kicked out of the community, and it turned into a bunch of forks. So today, the branches of Bitcoin, they go up until 2017, but after 2017, they all split up, and ultimately BTC is the version of Bitcoin that looks the least like Bitcoin did before 2017. So it kept the name, but it ultimately didn't keep the appearance. It didn't keep the function. Like somebody from prior to 2017 doesn't really recognize the usefulness of things. And this is to the point, like they shut off the entire development stack. Like Bitcoin has a very robust programming language that is built on top of you send a transaction and it can trigger a token, that can trigger a smart contract, that can run an operating system essentially across the blockchain network. And all of that is shut off in BTC. So that's just, it's done for.
Right.
Ultimately, I'm a supporter of BSV, which is a re-implementation. It's from that split, so it synchronizes back to the Genesis block 2009 and all of that too. But it is Bitcoin without any of those limits. So if you want to try to mine gigabytes of information, you want to try to push, complex scripts, complex transactions, send, a tenth of a penny to 50 million people at once, you can do that, and it'll work just fine. And it's the only blockchain that is a re-implementation of that. Everybody else still has hard limits, and BSV does not. BSV specifically is Bitcoin the way that Satoshi envisioned it in 2009 and implemented it, and it just does what it says it does. It takes the Bitcoin elevator pitch of 13 years ago and delivers it essentially.
So what I've gotten from that summation of information there, BTC changed 2017-ish, give or take. And as more institution has got involved, funding things, remove the development side of things, excuse me, which basically turns it into that gold version of a wealth preservation unit rather than something you can spend and use as a peer-to-peer transaction type of thing as it was originally intended to do. And so that right there further benefits the financial overseers better than it does actually the people. So you have people, out here telling people to get Bitcoin because it's 21 million is scarce and it's going to go up in value. Hold it, don't spend it, and just look at it. It'll get pretty and it'll protect and preserve you. But that was never the original intention. Yeah. And so now, does that more so favor the banks as well as eventually some people to say central banks are going to put on their balance sheet at some point in the future? It's legal tender in El Salvador. So this is the new gold standard. Now, I'm assuming this was always a part of the plan because Bitcoin was hijacked in a sense.
Yep.
And as of now, that is the preferred method of this monetary transition we're in now. So
For
this Great
sure.
Reset agenda,
Yep.
they're going to use Bitcoin and that model for this purpose. Basically, what you're saying.
Yeah, if you're thinking like a central banker or some predatory large commercial banker or payment processing company, like you're looking at Bitcoin and saying, look, we need to keep this niche. We need to keep this not disrupting our business model.
Mm-hmm.
We need to make sure that our customers remain our customers and that we acquire more customers, that we don't lose some new customer 2.0 over the next decade to this technology that we can't control.
Yeah.
So turning it into like just tweaking the way that people think about Bitcoin, like all it really takes is pump the price. If you make it look like nothing but an opportunity cost to ever spend your Bitcoin, then nobody ever will. Then nobody will use it as a thing upon which to build a disruptive business. Right. And they've been very, very successful at that. But secondarily, I think one of the second order effects of that is absolutely a control structure that mirrors the way that banks functioned back in the day with hard money. It started with, we'll hold on to your gold. We'll hold gold on our balance sheet. And we'll issue you these paper notes that you guys can circulate. Yeah. And then, just don't audit us. And then, it allowed all of these new financial vehicles to be created over like a 300-year period, primarily from the late 1700s or the mid 1700s up until today. We've seen just this incredible creation of these financial vehicles that were created by this notion of creating an inflationary asset off of some perceived hard asset that's sitting in some vault somewhere. And we're seeing exactly the same thing with Bitcoin. But Bitcoin BTC is that much more nefarious because there is that perpetually hard limit. So right now, a $50 fee, like, I'm a middle-class guy, like $50 fee, if I needed to actually use it, like I would deal with a $50 fee. Like if the whole world was functioning on BTC, I can deal with $50. But it's only $50 right now at today's traffic. So if this became the global reserve currency or was used in day-to-day transactions, we'd be talking about transaction fees up in the thousands or tens of thousands. Now, this is censoring everybody but corporate entities and the very, very rich. Yeah. Those are the only people who get to use the sovereign money, and everybody else is back to using some side chain, some custodial solution or whatever, except it's all digital. And so we've got all of the problems of cash, but none of the protections of cash in that new world. And so it becomes an even more stratified society where the people that were able to acquire Bitcoin early become an impenetrable and ruthless hierarchy of monetary oppression going forward. And I think people aren't thinking it out because right now they see the gains. If you bought BTC at the bottom of the market at the COVID dip in March 2020, you've made 20x your money at today's prices. And it's like, how do you argue with that person and say, well, here's why your wealth is bad? But that's the nefarious part of it, is that it's a bribe, essentially. It's like, look, we will make you much more petty wealthy in fiat terms if you obey the official narrative about what you're supposed to do with Bitcoin. Yeah. And
one of the things that led to my skepticism as I witnessed Bitcoin change into a surveillance coin that the bankers love, mainstream media pumps, was this cover here. And so I always refer back to this 1987 cover, and it was January 1987 at that. And it said, "Get ready for a world currency." And of course, we see the Phoenix with burning currencies and around its neck, some type of coin, and people speculate or whatever. But the timing of that is 2018, which is around this time frame now. Currencies ultimately, due to inflation, is burning. And now Bitcoin has been thrown out there as a savior from all of this. And I never took this as a coincidence. I always thought this was intentional. And of course, the one of the owners of the economies happened to be the Rothschilds and all the other people involved. So I always was suspicious of the solution to the problem that they created happens to be the very same thing that excites people right now. And that's one of the things that keeps me on edge about it, because it's here now. It's not going anywhere. But yet, will it really operate or serve the people in their best interest rather than just turn into a booby trap to where they'll get involved and somehow, some way, because everything's publicly visible, tracking, tracing, more of the things you just mentioned. So does these, am I too far-fetched to link all this together, in your opinion?
I don't think so. So I come from the cybersecurity space, at least a bit. That's one of my background practices. And with most things, like when you think of like a hacker, for example, like hackers are not sitting there doing like deeply technical things to break into your network. It's actually much easier to social engineer someone. It's easier to say, hey man, I can just call an old person and tell them I'm from their insurance company, and they'll just give me their credit card number if I tell them they're supposed to.
Right.
Like that's way easier than doing like complex computer hacking stuff from a van and a satellite dish and all the stuff that you think of when you think of hackers. And it's the exact same thing with economics. It's or slavery, for example. Like we live in a free range plantation in the Western world. It is paper money is slave money. It keeps us enslaved. It keeps us inside the fence. And it's great because we think we're free. Like we're the ones saying, like
that's how they've been able to get it. That's how they've been able to get away with so much monetary, financial, disruption of our lives because we don't know any better. But
exactly, and I think it's the exact same thing with Bitcoin. Like people look at it and say, I don't know, no, they can't. Nobody can control it, and it's true. You can't change Bitcoin. You can't change the protocol, but it's the same way that like. I don't know if you're a religious man, but like you can't change the Bible. Like if God is real, like he said what he said and it is what it is. But there's also a few thousand denominations of people that are basically Christians because, well, I don't know. I think women need to wear dresses, or I don't think we're allowed to have a drum set, or we're supposed to spend every day of our lives baptizing people, or, whatever. And it's like they focus on one of these things and they turn that thing into the cornerstone of the religion. And it's like, yeah, like that's kind of what the Bible says, but you've spun it on its head a little bit, and then it's hard to argue that they're wrong because in some ways they're right, and it's the exact same thing with Bitcoin, and so
what's this to parallel that to that using that metaphor of using the Bible, like they soft forked the Bible. There's different denominations now. They all can say it goes back to Genesis, the original book, but then they pick and chose what works best for them. And so here we are with a lot of options, all coming from the same source, but yet taking us in different directions. And that's what a lot of this digital asset stuff is all about. And so I definitely want to touch on, for those tuning in, I'll get your questions. I want you to throw some questions out there.
Sure.
So I want to talk on different angles of things. And so let me actually pull this up here because there's also a lot of bad actors that, of course, our government don't talk about them. But yet, as you guys can see on the screen here, you know what I'm referring to here, but it says intrigued deserves scrutiny at MIT. So we got the MIT gang, a lot of individuals, Saylor, and a lot of people link back to MIT as well as this individual on the screen here, the name rather. Can you link some of those parallels back to the more nefarious dark side that we're not told about or most people don't want to discuss?
Absolutely. So Jeffrey Epstein, people know him for his human trafficking, and they know him for being a guy that basically pooled money of billionaires and other people in powerful positions, and then used his human trafficking operation to blackmail people into giving him more money. This is what we know about him. What we don't know about him is a lot of the sealed and redacted stuff. And there's a ton of it, and we saw even more of it in the Ghislaine Maxwell case, where just piles of people's names were not ever allowed to be released. Right. Well, the guy in that photo, there's a Japanese man who was in that file photo from MIT, is a guy named Joi Ito. Joi Ito ran what's called the Digital Currency Initiative. What is it called? It was the Digital Currency Lab at MIT, and it was the Digital Currency Initiative that he ran. There it is, Joichi Ito. He's a fundraiser. He's not like Epstein, but he was a fundraiser for a hedge fund out of Japan. But he was also a sitting chairperson for that department over at MIT. Now, why would Jeffrey Epstein be working with Ito? Well, the interesting thing is that MIT, the Digital Currency Initiative, had 3 developers on staff. For the very early portion, there was a guy named Gavin Andreessen, but he left pretty early. The other 2, one of them was named Corey Fields, and the other one is named Vladimir Vonderlaan. Vladimir Vonderlaan is the single most heavy contributor to Bitcoin Core the GitHub, the open source, the development repo. Up until just about a year ago, he actually retired sometime last year, middle of last year, and he's since been superseded by another developer. But for the overwhelming majority of Bitcoin's history, Vladimir van der Laan was the single largest contributor to Bitcoin's code and changing things, changing core protocol ideas, like making it more useful for one thing rather than another. He's one of those guys making the changing the denomination of the religion of Bitcoin, right? So he had control of that stuff. Very influential guy, and he was funded almost entirely by Jeffrey Epstein. So then we need to look at, okay, first of all, how? So Jeffrey Epstein needed a store of value that could be useful in cross-border payment because that's his clientele. Like, obviously, you can't send from your Chase account and be like, hey, I need a few 15-year-old girls for a party, Right. So that's the kind of thing that he was using Bitcoin for. The problem was the fact that it's a public ledger, and you don't want the FBI sniffing up your accounting. So it was a lot like, hey, we need to add anonymity. We need to add ways to take transactions and keep them valuable, but also keep them off the blockchain, because the blockchain's the thing that's going to get me in trouble. That's where the accounting happens.
Right.
And so he was paying developers to work on ways to bring transactions off chain. This ultimately became what's called segregated witness, and then that what they call SegWit predicated the creation of Lightning Network, which is an off-chain payment solution that's really just getting bootstrapped in the last year or so, but it was being paid for many, many years to get the research done. And so he was laundering money into MIT through Ito's hedge fund in Tokyo. And now I forget the name of his hedge fund off the top of my head, but Digital Garage. It was called Digital Garage. And so there's a lot of that. Now, there's a lot of real twisted connections with a lot of people there. When you look at who are the big funders of all of these big hedge funds, and you start to see some names come up that you've also seen in like some pedophile accusation circles. Guys like Brock Pierce get his name mentioned. Brock Pierce also helped fund Tether, which is basically the Federal Reserve of Bitcoin. It is the softest of the soft money in a space to pump assets. And so there's a lot of people in a space that really, this could be a 5-hour long documentary that does nothing but connect red string between photos of nefarious parties. But these are the people that have been steering Bitcoin since pretty early to really work, again, for the elites to be able to transact very large amounts of money, but for regular people like you and me to say, I'm not going to bother. A $50 transaction fee is pretty dumb. And if I don't spend the money and just sit on it for 2 years, I'll probably make more money anyways. And so, so it takes away the ability for me and you to like start a really cool company that makes a ton of money. Instead, it's just like, no, you know what? I'm going to back up. I'm going to let my assets sit and absorb value. And I'm not going to work. I'm not going to create. I'm not going to be an entrepreneur. And
now you mentioned Tether. And of course, Tether is always often referred to as being, as you just mentioned, the federal or the backdoor or entry point for Bitcoin or the entire cryptocurrency market itself. So I see a lot of people concerned with the use of Tether, and if Tether, because they're not, there's no accounting mechanisms to hold them accountable for what they're holding. And so a lot of people link it to possibly Evergrande and stuff like that. So is it good to say wherever Evergrande wherever Tether goes will also ultimately determine the market or the digital asset market in general? 1.9 trillion, whatever the market cap at this current moment is.
Generally, yes. In my opinion, yes. So Tether has some competition now. Like, there are some better competitors in the stablecoin space, but they're going to suffer from the same problem that Tether suffers from, which is, how do we make money? How do you make money doing one-to-one transactions of give me $1 and I will issue a digital dollar?
Right.
You need to create some inflation in order to create an interest rate, in order to do some lending, in order to actually make some money. And so Tether's business model doesn't even actually make a whole lot of sense. Like, our dollars are already digital dollars. I'm not trading paper money for Tethers. If I'm going to buy Tethers, I'm sending them from, my Bank of America account, which is itself just a number on a ledger somewhere else. And so we already have a serious and growing fractional reserve problem in the quote unquote real money market. And then it gets exponentially worse in the tether money market, because they look at it and say, well, we don't make any money by playing by the rules, and people aren't even sure what rules we're supposed to play by. So we're going to do whatever the hell we want until we get in trouble. And I mean, we saw the New York Attorney General's office gave them a $14 million fine for a whole bunch of accounting malfeasance. And it's like, what's 14 million bucks? They're printing $1 billion a week sometimes, like that's nothing. So, I mean, if that's the slap on the wrist, frankly, that encourages all of us to become a tether and, just make more money out of thin air and just play the same game that the Fed and the other banks play. And so it's really, really bad. But so that's all the tether stuff. But what does it tell us about the price of Bitcoin? Like who bought all those Bitcoins, right? Like the price is relative to the demand in the market. But if the demand in the market is already artificial because dollars are cheap and getting cheaper, and then you add on the compounding problem of tethers that are an even softer form of money and getting softer at a faster rate than US dollars, even to the tune of, I've seen some numbers that say it's over 90% of all trading is in tether. So it's like, okay, so is 90% of the value of BTC fake? Right. It really could be. And
so let me ask you a question. So now, I guess last week, Biden mentioned something about national emergency, national, concerns with the digital asset space, including stable coins and things like that. And it looks like they're talking about putting the power and control into Janet Yellen's hands to determine some things. What are your thoughts on that? Is this going to be disruptive? Are they trying to destroy the digital asset space in general in preparation for their CBDC that they want to roll out, or what are your thoughts on that?
I think that's part of it. One of the relevant things, like I said, in 2014, MasterCard was the main proponent behind creating Digital Currency Group and all this stuff. Well, today, MasterCard is the largest patent holder on CBDC-related technologies. So they're looking at it and saying, okay, keep Bitcoin in the corner. And by the way, we've got this blockchain-enabled digital currency thing that the Federal Reserve can take on. And so I think there's a little bit of like under the table, like palling around, and, hey, we'll solve this problem, you solve ours, and all of that. The Biden administration, and I looked at their, whatever it was, a state of emergency, what did they call it? It was national security issue or whatever.
I'm trying to find the trying to find an article now. I found it. Go ahead.
And honestly, I think it's silly. People will say, Bitcoin fixes this, and they talk about all these social ills and all these other things. And it's like, you know what? I haven't seen an actual problem anywhere that Bitcoin's actually fixed. We get a lot of people politicking. We see a lot of people that have gotten very rich. Like if your problem was that your family was poor and now you're more wealthy, like, sure, that's a problem that Bitcoin fixed. But like, these are the kind of things that it's like, these are like lottery stories. This is the guy that went and bought, never bought a ticket and went and bought one once and $30 million bucks, and it's like, that didn't actually solve, that's certainly not a societal problem, but like the problems that Bitcoin can fix are problems of like real cross-border settlement in real time, or something like, I don't even know, like logistics logs or something. Like think of a big shipping company that has 20% or maybe more in just fraud across their books, and they don't even know how to fix it because there's just so much corruption top down in their entire organization. And it's like, okay, well, have everything at every point get hashed to the chain, and then it's just there. And then if somebody makes a change, either through incompetence or malice, when it happened and who did it because that person's identity is connected to that transaction. And if the wrong person was holding the wrong fob, that's also known to the system. Like it gives you a way to target and pinpoint. Like that's something that's actually disruptive. Like that's something that saves the economy money. It gives an edge on early adopters because they're just more efficient than their competition and all of these other things. And like, but people, again, they look at that and say, I don't want to make a few $1 billion disrupting the shipping industry. I want to sit and hold my Bitcoin and, hope to avoid taxation and whatever. So I think this national security thing, it's Biden. Biden is not a bright man.
Right. I don't really think he's calling much of anything. They're just using him as the front man.
Yeah. It's Just get him talking about Bitcoin. This is some policy advisor at the White House saying, get the president talking about Bitcoin, and it'll get some headlines. So that's
now,
what I think it is.
Let me get your thoughts on, and so I definitely want to open up and get some questions from the audience directly. The legal tender status. So we have, I think Arizona is talking about proposing some type of legislation. I don't know how far to go, but we have a state now talking about it. Texas wants to become more active. Miami is doing some big things. So BTC, like it or love it, whatever, it's here. They're going to use it, and hopefully it's not used against us in the future somehow, some way through regulation, taxation, or something. But what are your thoughts on BTC as a legal tender? If it becomes legal tender, is that a way of disrupting, perhaps, or is that a part of the plan as well, or is this a big setup, or what?
So it's primarily coming from. So there's two groups of people that are talking about Bitcoin as legal tender. They are either conservative politicians, like in the United States, it's been primarily Republican politicians that have talked about this because, they have a general idea about sound money, that is something that they want to be part of their reputation. It's good for election politics and that sort of thing. And then secondly, we've seen a lot of people that are very corrupt politicians that want to join the sort of Bitcoin technocracy that exists. They want to join the Bitcoin culture because they see it as a way to maybe launder money, maybe join the new nouveau riche aristocracy, the internationalists. So those are the two groups. And so these are the politicians that we see doing it. So like El Salvador, I think, is a perfect example of like a literal fascist dictator who wants to have connections to first world countries in this new disruptive technology. He wants to be a very powerful technologist because of the decisions that he made over the last year. In Arizona, I think it's different. I actually think, I looked at the bill there, and it's like they want to try it. I think they legitimately want to say, like, you know what, if you want to pay your taxes in Bitcoin, or if you want to have it be done at the gas station, like I think these are people that just genuinely want to try the idea. But that's typical of Arizona. It's a very libertarian state. They look at it and say, hey, why not give people another option? We have problems with the US dollar. Especially, people that are not bullish on the inflation situation. They look at it and say, you know what, Bitcoin might solve this. I keep hearing people say Bitcoin solves this, so let's give it a shot. And I think that's actually what's going on in Arizona. I live in Florida now, so I'm not going to talk too badly about what I think is going on in Miami. But Miami is not known for being the most honest business city in the world generally. So I think it's a mix of things in Miami where I really think it probably comes from a good place from Arizona.
All right. So I want to get your thoughts. And then, of course, I want to share some more light on BSV because I'm familiar with it, but I'm not too familiar with it. But Litecoin today announced that they activated Mimblewimble, offering a little bit of some form of privacy behind it. And so once again, I'm excited about the fact that everything is not as transparent. We want it's able to be transparent, but not necessarily all right transparent. Is that necessarily a good thing? Like, how come the privacy coins don't get enough attention, or is that by design so that they're not looked at and frowned upon and part of the destruction of the market itself?
I think part of this is a defining of terms, like privacy versus anonymity. Bitcoin is itself a privacy technology. The reason it's not private is because most people are treating it as an investment only, and so they are buying it in an exchange. That is, the exchange has their identity information, which means they need a way to break that chain of custody because they initiated their own identity being tied to those Bitcoins. And so that creates a second order problem, which is something like Mimblewimble, but there's things like ZK Snarks, Monero. I was a big Monero miner back in the day. These are things that break the chain of custody and make it that you can at least have plausible deniability that, like, hey, that wasn't my coin. I didn't make that transaction. But that's really not the way that the technology is supposed to be used. If on the other hand, you, like me and you, are doing business with one another, let's say I sell something you're interested in and you want to buy it from me, and we just do person-to-person transactions back and forth like cash, there is no identity. There is no chain of custody there to account for. Like a lot of hot dog stands, don't keep all the receipts because they're cash only. And it's like, you know what? Who's going to audit me anyways? I'm gonna pretend I only made about 80% of what I actually made, and I'm going to pay a little bit less in income tax. Like this is the kind of thing that, a small business owner, we know they do this in things like hot dog stands or other cash businesses, but with Bitcoin, like Bitcoin is a privacy technology when you use Bitcoin the way that Bitcoin is supposed to be used. And that is, as the title of the white paper says, Bitcoin, a peer-to-peer electronic cash system. And so if you use it like cash, it's private like cash. Like you can see that there was a transaction, but the link to my personal identity does not exist on chain.
Right.
And that only breaks if you have a large set of people whose identities you do have, which is the case today. It's over 90% of all Bitcoins are KYC because they're buying them from places like Coinbase and Kraken and Gemini and some of these other places. So then it's not private, but that's a usage problem rather than a technical one. And so Litecoin is not special in any way. Like it does not do anything unique. It is in my opinion little more than a test net for BTC because they're so similar. They are built fundamentally on very, very similar technology. And so you can test stuff out and say, okay, well, this is how it worked on Litecoin. Maybe we can push this into the Bitcoin Core repo over the next 2 years. And that's really all that it's used for, which isn't nothing. Like that has some value, but it's not going to be a global cash system. It's not going to be some huge disruptive thing. It's always going to kind of be like, I don't know, BTC's like redheaded stepchild brother or
like
something.
They like to use the gold to silver type of comparison. But BSV, and then we'll get to some questions. I promise you. BSV, give us some of the pros that makes it different than BTC, and do you actually see people adopting and using it in the way that I guess it's intended to be used?
Yeah, absolutely. So there are some days when there are more transactions on BSV than on all other blockchains combined. Now it's a mix of things. This is everything from e-gaming, it's casino stuff, it's NFT trading, it's smart contracts, it's even a bunch of commercial applications. It's stuff like tracking salmon across the sea as an NFT. Each fish is turned into an NFT so that you can sell it for a little bit more at the restaurant because you can prove its custody from sea to table. It's also just a bunch of simple transactions between people. This is like the hand cash wallet, for example, is like I could send 10,000 pennies a day to people, and the fee is 1,000th of a penny per transaction, and whatever else. That's really what it's for. Like Bitcoin is a transaction technology, and it is a stack to allow you to do other really cool things. And right now, it is the only chain that does that. And so this was all theory 3 years ago, whether or not Bitcoin could do these things. Like Ethereum, for example, is a smart contract platform. And people said, well, you need Ethereum because Bitcoin can't do that. Old Bitcoiners looked at it and said, no, like the stack is there. You could do it. And it's like, yeah, but it doesn't scale or it doesn't whatever. But it was all theoretical. What we've done now, so Ethereum has a hard cap of 15 transactions per second globally. On BSV, we've seen in the wild like 10,000 transactions per second. This is just actual use. This is people using the chain, 10,000 transactions a second globally. But we've also seen in testing situations and in some of our stress tests on the mainnet and things, there's no reason why it can't hit 100,000 transactions per second globally, which, Visa on Black Friday is about 65,000 transactions a second. So we can already outpace Visa with BSV. And this is with existing technology. This is without having to upgrade. This is no roadmap stuff. This is today. Like if we were to suddenly onboard, let's say the entire state of Arizona didn't say it's legal tender, but said you have to pay everything in BSV in state, it could do it. It would just do it. There'd be no problem. People would get their wallets, people would transact, and we'd have very, very big blocks, and they would process. So that's the beauty of it. It is the only blockchain that does not have some roadmap that needs to be fulfilled. You can look at 10,000 other blockchains that say, here's our roadmap items. Here's where we're going to be in 12 months and 18 months and whatever else. Here's the ways we're going to scale. Here's our limitations. Here's our theoretical stuff. All of this is like we opened up everything and we say we're going to let the free market in network, not the external, not the people who buy coins, but we're going to let the people who run the infrastructure of the network compete to be the best supplier of space and all these other things to the network. And we've had phenomenal success on that front. We have blocks that are over right around 2 gigabytes of data per block. That's every 10 minutes. So BTC has a 6 megabyte per hour limit, And we have 10-minute blocks where there's 2 gigabytes of data that'll go across the network in little tiny pieces. This is a Bitcoin transaction is 250 bytes. So 2 gigabytes is a lot of transactions going across the network. And so we've proven that the propaganda from the Bitcoin Civil War was all false. Like Bitcoin works just fine. It actually works way, way, way better than not just Ethereum and some of these other things that were designed to solve, Bitcoin's quote unquote problems, but also works better than the existing payment networks. MasterCard and Visa is like 70s technology, and Bitcoin is here and is exponentially cheaper, faster, easy to use, et cetera, and then gives you the sovereignty of your identity and controlling your own money with your private keys. So BSV, in my opinion, is if everything you've ever heard about the blockchain, all these elevator pitches, all these things that blockchains can do or will do or should do, BSV is the only one that actually does all of them today. It's the only one. Nobody else actually does all that cool stuff that you think a blockchain can do. And so it's just there. If you want to build a business that needs a blockchain, we're the only one that you can build on it today, and the protocol's not going to change. Your business isn't going to have to retool in 2 years or anything like that.
All right. Well, thanks for sharing some of that information there. So let's dive into some questions. So if you have any thoughts or questions, feel free to throw it out in the chat and I'll jump on it. And we can touch on it a little bit more. So just highlight everything in dollar to stand out. And let me see here. I see a lot about Charles Hopkins. And let me see any questions, anything to jump out here. Feel free to ask and we'll get it out there. I'm not sure what this question is about, but they'll talk about how they pay taxes. I'm assuming that has to do with the legal tender side of things. If it gets to legal tender status in Arizona, then how does that play in with taxes? Because if it's legal tender is money, then how they tax out on a federal level would be the question.
Well, that's actually probably the biggest benefit of using it as legal tender is that the federal tax situation is going to be forced to recognize it. As more and more states adopt it that way. So it's really a shame that it's treated like property, which is just one more incentive not to spend your coins and use them to build things. So that's a good thing. But right now, it's capital gains or capital losses every time you make an exchange or make a transaction even. So that's rough right now.
Okay, here's another question here. Reggie Middleton. I'm not sure. Have you heard? Okay, so how about Reggie Middleton?
I've shaken his hand. I spoke to him in Miami like 2 weeks ago.
All right, so his question is, how about Reggie Middleton's DeFi foundational patent, which was filed back in around 2013 and recently granted? And so, of course, I had him on the show a couple of times, and it looks like he has the right and say so to challenge a lot of other projects and blockchains and things like that.
Sure.
Do you think he'll be successful? Why is the mainstream media ignoring him?
I think he probably will be successful. I haven't taken a real deep look at it, and I'm certainly not a patent lawyer, but at a glance, the stuff looks really solid. This is one of the things, like I mentioned Craig Wright earlier. Craig Wright has about 3,000 Bitcoin related patents. That's more patents than any individual, any company. In fact, it's more patents than I think Thomas Edison. He's actually one of the largest patent holders in the history of the world. And again, people ask him or act like he's some kind of like he's nobody, he's a scam, he doesn't know what he's talking about. And it's like Reggie Middleton has one patent, and it's a good patent, and I like Reggie, and he's a smart guy, but it's one, and but it's good, like the DeFi, as I understand it, he basically defined in 2013 like how DeFi related, like in lending and investment and interest and stuff, can be handled on a blockchain. And it's well thought, and it is implemented that way by a lot of blockchains. So I think he absolutely has a case if you were to take it to court.
So feel free to chime in on this. It says Bitcoin's BSV is currently highly centralized. Beware. So what are your thoughts on that? I'm not too familiar, but curious.
So this is the conversation about centralization and decentralization, which people act like is a very black or white thing. And it's not. It's a sliding scale. So in fact, the word decentralization doesn't even have a clear definition. It just means that it doesn't have a single point of failure. And so can something be more decentralized by having more layers of redundancy that make it less prone to failure? And the answer is kinda. So it's actually a computer science problem. Like I'm in the cybersecurity field by trade, and ultimately, like a decentralized thing is to basically have 2 backups of anything, and that's it. Like you need 3. Because if your main one fails and your backup fails and your third one fails, you deserve to fail. But like, so is it sufficiently decentralized is the real question. I think most blockchains, like I said, remember I said everybody has a roadmap, right? There's 10,000 blockchains that have a roadmap. Well, who controls that roadmap? Who's the gatekeeper? Who makes the decision? The next thing that happens to your blockchain. That's very, very centralized. Now in BTC, there is a system of voting and governance. There's a gatekeeper. There's you have to make a pull request on GitHub and all this other stuff. But ultimately, it's 4 guys that make the decision if your software gets pitched to the rest of the community. So that's 4 dudes right there. So that's very centralized. And this is not an issue in BSV because, like I said, the protocol is set in stone. It's locked down. It's done. So there's no roadmap. So there's nobody to become a political liability in advocating for one roadmap versus another. It's ultimately up to proof of work. I actually run a BSV mining pool. So 3 of the nodes on the network are run by Gorilla Pool, which is me and a couple of guys, and we're competing for consensus. Like I want to win. So when people say it's centralized, I look at that and say, no, I have serious competitors that they want to beat me and I want to beat them. And that's the nature of decentralization. We're competing to be the best node, and that's it. So everything else is opinion and politics, which is debatable forever.
Question for you. This is just mine. I'll get to some more questions here. As of, I think today or so, I think I heard a number that there's approximately 17,000 different cryptographic projects, protocols, blockchains, whatever.
That could be.
And so out of the 17,000, how many are going to last in your opinion? Like how many actually, in your opinion, serve a purpose that will be around for some time to come?
Almost
especially this next crypto winter, how many will be flushed away in your opinion?
Less than 1% will survive. They're all clones of each other. There are 3. Well, there's 4. There's 4 basic protocols. There is Bitcoin and related forks and clones. There's Ethereum and related forks and clones. There's Bytecoin and related forks and clones. Bytecoin is represented by Monero. Actually, Monero is the best representation of that. Bytecoin it might even be dead, but Monero is based on Bytecoin, so it's a specific protocol. And then there's Mimblewimble, and there's maybe 6 projects that are Mimblewimble projects, but that's it. Every single one of those blockchains is based on one of those 4 things. And it's at least 10,000. It could be as many as 20,000 different projects, and most of them are actually tokens on other chains. So it's when you hear there's 6,000 coins on Ethereum, they're just Ethereum, just like they're it's just Polygon, it's just Solana, it's just some of these other chains. And they're redundant. Why would we need 17,000? They can only do one of 4 things.
All right, good point. So here's a question I think you already answered because you mentioned about running your own node, but can you mine BSV was put out there? And what's the difficulty level? Like I remember when BTC first started years ago, you can do it from a laptop apparently, but yet I guess as things got a little more difficult, more challenging, it became very hard to do that. So BSV, I'm assuming it's the same as with Bitcoin. You need the rigs to do that, or what?
ASIC mining. They're identical. In fact, most pools mine BSV, BCH, and BTC. They just it's whichever is more profitable that day is what they switch to. But if people want to mine BSV, get an ant miner. You can get an S9 ant miner for $500. It'll be used and it's not particularly profitable, but you can absolutely mine. If you want to be serious about mining, you really should set aside at least $10,000 to invest in hardware. And then, we'd love to have you at Gorilla Pool. So if you want to buy a miner, man, we'll pay you out. We pay out twice a day and we don't charge a management fee. So let's do it.
Let me get your thoughts on quantum computing and the threat to disrupt some things. I believe quantum computers are a lot further along than what we're being told. And that could be a way where at some point, relatively sooner than later, they meaning either China or whoever the superpowers will probably use it to disrupt some things, shake out confidence, and cause some serious issues, really forcing the CBDCs upon people. What are your thoughts on quantum computing?
Twofold. So let me start by saying I'm not a computer scientist, but computer scientists, real ones, tend to say that quantum computing is not actually a risk. The reason is quantum can be used to decrypt things very, very rapidly, but they have to have a target. They have to be given a certain amount of information that allows them to even start.
Right.
And that information is easy when you do it in a controlled environment. And even when you do it in a controlled environment, like let's say you have 5 steps in order to truly crack a piece of encryption. Well, the first step is a certain amount of difficulty, but like an earthquake, like the Richter scale, the second step is like 100 times harder to solve than the second step.
Yeah.
And then the third step is 1,000 times harder than the second step. And then the fourth step is 10,000 times harder than the third. So it's like one of those hockey stick curves on difficulty.
Yeah.
And so a lot of quantum computers can solve like the first 3 or 4, but like that 5th is like so far gone into the difficulty. It's beyond what you almost can't calculate the odds of breaking it. And then here's the other thing: is this is an economic concern. Who's doing the most work on cryptographic hashing and the technology? It's the people securing Bitcoin.
Yeah.
Like miners are the people that do the most research and development into hashing algorithms. And so if somebody were to create quantum like decryption, well, you could use that to create quantum encryption, and you could get an edge in your Bitcoin mining. It's much more profitable to be an extremely competitive Bitcoin miner than it is to just decrypt and just destroy the chain. Like it's a madman, it's a terrorist situation like that. And it just doesn't make any sense, because it's the kind of person that could crack that thing is just going to mine Bitcoin anyways. So I think it's a much more overstated fear than people realize.
All right, fair enough. So it looks like we're coming down the home stretch. We're about a little bit over an hour. I appreciate you, Kurt, for joining us here. And for those that are tuned in, the goal was to get someone on here who's done their homework and diving down the BTC rabbit hole, shining light on some of the dark side of things, the things that a lot of people don't want to talk about. I definitely want to have those discussions, because I think people should know both sides when they're putting their funds towards things that they are being told is going to change the world and it's disruptive and it gives them their freedoms back, but does it really? But we're going to find out. But Kurt, I appreciate you for coming on and sharing your 2 cents. Let me actually put up your Twitter account where you can be found at, so people can dive in deep if they want to reach out to you. Let me put this on the screen here. But any last thoughts you want to leave us with in reference to this current season? Because we're beginning of 2022. A lot of people are concerned about the market's not responding, to the moon fashion like it has in the past. But what do you think we're going to end up this year? Is it depend upon the markets or the Fed, or what? What do you think?
I do think it depends a lot on the Fed. I mean, if interest rates go up and they're going up in a ladder fashion and they're going to continue to go up for maybe years, like that's very bearish on things like cryptocurrencies. So if they don't, like if we see a stocks crash and all this stuff, like we've seen this a lot of times. We saw Trump do the same thing. We've seen most presidents do this. They try to tick up interest rates. Yeah. The stock market looks like crap, and they're okay. No. We need to pull back, and they're calling the red phone at the Federal Reserve and saying lower those interest rates again. So I don't know, and a lot of it really does hinge on what the Fed does. They're kind of painted into a corner, like they kind of have to raise these interest rates at least for a while here. Yeah. So. I'm pretty bearish on that. And if the crypto markets are bearish, I'm actually pretty bullish on precious metals. So I think the things that have underperformed, Lindy effect, Gresham's law, and some of the stuff that people talk about with Bitcoin, like that actually applies more so to precious metals in an environment where people are unsure. Right. People have made a lot of money on FANG stocks and medical research stocks and crypto. Right. And so, man, it makes a lot of sense to let that trickle into some precious metals and some stuff that's maybe underperformed, maybe a little more stable. But ultimately, we don't know. And a lot of it really is contingent on the Fed. But I think people, like when it comes to Bitcoin, like think about the things that you can only build on a blockchain. Like we have yet to see the big business that can't exist without Bitcoin. But if somebody cracks that code, and I know a lot of startups, and they're almost all on BSV because they see it. They're like, hey, I had to leave Ethereum. I had to leave Polygon. I had to leave wherever I was developing my project. And I'm here in BSV and I've got a 5-year plan and blah, blah, blah. I'm going to be a billionaire and I'm going to do it by solving a problem that can't be solved any other way. I think there's big opportunity in creating disruptive businesses, because if we're going to be, living in a downward trending economy for maybe years, maybe a lot more than years,
right,
man, it's going to make a lot of sense to be the guy that can give low friction services to that new economy. And I'll tell you right now that BSV is one of the only things that can remove a lot of the friction that exists in the current hierarchy, the current paradigm. Yeah. And so it makes a lot of sense to get yourself educated on what can you actually do with a blockchain, and maybe look to create a business there, because a good business is survives the recessions too.
Very true. Very true. Well, Kurt, I appreciate you for joining us. Let me put your this is your Twitter location here for anybody want to follow and connect with you. I appreciate you coming on and just giving us some insight as to the other side of the topic that no one wants to touch. And so I definitely so as a result of having listened to one of your prior interviews, dive into BSV a little bit and just try to better understand it. But definitely looking forward to continue to learn, because I think this technology is here, whether you like it or not. It's not going anywhere. Might as well learn about it and find some way to get involved. That'd be better than ignoring it and turning your back against it and saying it's it's all that good stuff. So anyway, but once again, appreciate you for joining us, and definitely hope we have you on down the line, and
for sure,
just get your thoughts on the market and see where we're at that point. But hope everyone enjoyed this back and forth in regards to the dark side of BTC. Leave a comment down below. Definitely go check out Kurt on Twitter, and I will see you guys later. Peace.